Okay, so here's my analysis of financial market components and types. All right, so first of all, we have the financial instruments. That means equity, which includes stocks, ETFs, mutual funds. We have debt instruments, which include bonds, certificates of deposit, and T-bills. And we have derivatives, which have options, futures, and swaps, and functions which raise capital, hedge risk, and enable speculation. Then we have characteristics of financial instruments, which is equity, ownership in companies, potential dividends. As far as debt, we have fixed income, repayment with interest. And as far as derivatives, we have contracts based on underlying assets used for risk management. And then as far as the roles in financial markets, we have people that are investors in personal investing. So a person that's an individual that will be investing in stocks, that will be an investor. We have institutional investors, which are pension funds going in that field, mutual funds joining together as a team, etc., instead of just being individual by yourself. And then we have intermediaries, which would be organizations that help settle agreements between those that are the buyers and those are the sellers in these markets, that's why they're called intermediaries, because they are in the middle. And this include banks, dealers, etc. Then you have issuers, which would be at the higher level of government because they control the area, they control the industry. And then you have regulators, which ensure fairness and that everything gets done properly, everyone listens to the law. And then finally, we have a comparison of major financial markets, which is stock market, where we have equity, trading, growth capital, and high liquidity. And then we have bond markets, which have debt, trading, stable returns, and they fund public and private projects. And then derivatives market, which involves risk management, speculation, and complex strategies. Then we have the functions of it and the importance that we have of these markets, which include capital formation, price discovery, understanding how different investments have different prices and what they can do for you, liquidity provision, providing you with money, whether it be, especially providing you physical paper money or being able to have digital money, just being able to turn your assets into some form of money, some form of value. And you have risk management to help you to avoid, going out and, let's say, spending your money in something that would impact you in the way that you would lose money, but instead of spend money in something that helps you, something that benefits you, something that helps you to grow your finances. And then we have the last one, which is that they're vital to a business expansion, government funding, and investor confidence. So if you want to fund your business, you want to gain that impact, then investing in assets in these markets is key. And finally, in conclusion, we have our summaries that we had financial instruments, which provide investment and hedging tools, participants driving market interactions, and diverse markets serve specialized yet interconnected roles. And then understanding markets is key to strategic investing and economic insight. And finally, here are my references, and that is it. Thank you very much.